What would you want out of next week's meeting?
Well, this meeting will crucially be about negotiations on the capital directive, the CRD4. There are some quite tough steps that needs to be taken before we are really close to an agreement, but there is the prerequisites are set.
And what do you hope to get out of for Sweden? What would you want the final deal to look like?
I think it's very important that we follow the core of the Basel Agreement, which would open up for tougher capital requirements for countries with a large banking sector like Sweden or the Netherlands or the UK.
And how much tougher than what's on the table right now, or than the 7%? That's the original figure.
Well, we think that there should, at the end of the day, there might be a need for kind of a phasing in of tougher requirements, but at least 5% additional capital in the long term is necessary.
So would Sweden be happy with the Danish proposal that's now on the table that would allow countries to require another 5% on top of the 7% that's been agreed in Basel?
Well, there are some details that needs to be hammered out, and we also need to see that there is a broad-based support for a compromise solution.
And do you see that there will? I mean, what would that compromise solution look like?
Well, it's also very important that we don't undermine the definition of capital, because that would obviously only circumvent the credibility of the agreement. So flexibility for the countries that need tougher rules so that they have a bigger banking sector, and also keeping up a stringent definition of capital.
And you're proposing up to 5%. You would be happy with that?
Well, I think it would at least be in line with what we are planning for in Sweden.
So if the final deal includes a 5% additional surcharge, then Sweden would be happy with that?
Well, that would obviously then also include that we on top of that would be able to have cyclical buffers and sci-fi buffers for global sci-fi buffers. So all in all, for us, a 5% additional would be a good step.
So what's actually wrong with the proposal that's on the table right now?
Well, I think a major lesson from this crisis is that the banks that are more hurt by the market are the ones with low capital. And if you run into a banking crisis, the essence of the problems is the lack of quality capital inside of the banks.
What's your response to the French argument that if one country has higher capital requirements, all the other countries will be forced to follow suit to make sure their banks don't look bad? Well,
first of all, I disagree, because the banking systems are different in Europe. Some countries have much larger. Our banking system, for example, is also catering for the Baltic countries. We also have quite a high degree of indebtedness in our households. And let's face it, some of the Euro countries are in bad need of higher capital requirements for the next coming years. A country like Germany, for example, if the ECB are setting an expansionary monetary policy to support growth in the Mediterranean countries, well, that might in the years to come, not this year, maybe not next year, but in the years to come be a very, very low interest rate for Germany. And if we do not want to see imbalances, the only tool that they have left to deal with a very, very strong monetary expansion is to safeguard their banking system through capital requirements. So
are you saying that all European banks should have higher requirements than the 7%?
No, I think that should be up to decide by the governments, and there are differences between the countries. I would recommend any country to increase the capital requirements because it is a safeguard against a financial risk.
There's also an argument that this will force, if Sweden, for example, or the UK imposes higher requirements, that will, in their countries, that will force their banks to maybe deleverage abroad, and that will hurt countries other than Sweden and the UK in this case. What's your response to that?
Well, I think the historical experience is quite the opposite. The home host issue has been very difficult in countries where the home banks have redrawn capital from Central Eastern Europe during a crisis. We have seen that in previous banking crises in Turkey and Indonesia, that foreign banks have redrawn capital when there has been trouble. So if countries like Poland and Czechoslovakia and Hungary wants to strengthen their resilience to a crisis, they need higher capital requirements, and they should be supportive, and they are supportive of higher capital requirements in the home countries. We know that in a crisis, everybody would look to his own interests first, and that has in many occasions meant that you really squeezed Central Eastern Europe, and if you want to have a safeguard against that, capital requirement is a good one.
What's the likelihood of a deal next week?
It would be a major improvement because it would create clarity for the banks in Europe. It would be a good step forward to deal with the crisis. So we need to make a strong effort here, but I will not be ready to give up any of the major interests of our countries. So it really needs to be a compromise then.
But once again, what do you think of the chances that you'll reach an agreement next week?
Well, I don't think that it's up to me to say what other countries need to do, but I am not willing to compromise on the core principles that we have. So we will take a tough position in these negotiations. If we make a deal, that's fine. If there is an unreasonable unwillingness to compromise, we will stick to our positions because this is a major issue for us.
But 5% would be enough for you guys?
That would be in combination also with obviously cyclical buffers.
What would happen if a deal is not struck next week? What kind of consequence would that have?
Well, I wouldn't make it too dramatic. Then we would have to come back to the issue at the next ECFIN meeting. So I'm pretty certain that we will reach a compromise. But I must say that we are going into these negotiations with a tough position.
But you're saying if a deal is not struck now, then you have to wait for another meeting. The new requirements are supposed to come into force next year, and you also have to negotiate with the European Parliament. Are we not getting too close to
well,
the
timetable would be squeezed, so it is very important to get the deal. But in this issue, we have some core principles that we will defend quite heavily.